In today's video, I'll show you a quick and simple way to make use of market internals to trade the S&P 500. I have a chart in the background of the SPY ETF, and I also have the small 2-grid chart with the volatility of the volatility index, that's VVIX, along with the advanced decline spread. And on the bottom of my chart, I have the Cumulative TICK Pro. So we have 1, 2, and 3 pieces of different internal information that we can make use of, along with a chart of the S&P 500. Now we had everything come together today, which is why I think it's worth calling out and making a video about. First off, starting with what the cumulative tick along with the actual S&P chart was telling us. Starting around 11 a.m. Pacific, we had our first edge signal confirmation. This is on the 5-minute time frame chart. And soon after that, over the course of that 11 to 12 p.m. Pacific hour, you can see how we had 1, 2, and 3 different signals, all telling us we're officially in oversold territory. At the same time, if we take a look at the cumulative ticks, this tells us what the buying versus selling pressure is. We can see that each of those 3 different edge signal confirmations, that cumulative tick had slowly, gradually started to turn up. By that third one, it seemed like we were starting to build somewhat of a flatlining base. Now that third one came at right around noon on the dot, and we talked about how volatility tends to change in that final hour of the markets. We saw that happen right here with that noon candle. Now, interestingly enough, if you take a look at the volatility of the volatility index, we had a setup that is very familiar to us, the 1-2 punch setup. The setup finished at 11:40 with the second edge signal confirmation, and that setup told us that the VIX went down, then it tried to go up, and that was rejected, where now we expected the volatility of the volatility index to continue trending down, which would imply that the S&P should have some sort of a positive rally. These two have the inverse correlation. If you take a look at the advanced decline spread at right around the same time, this chart mirrors closely to the S&P, where you can see a bullish momentum cross, then a bearish one, then another bullish one, then another bearish one, and then finally another bullish one. A lot of back and forth here where we couldn't really see either side make up its mind. So if we were to summarize what the internals were telling us, we expected the VVIX to go down, which would imply that we expected the S&P to go up. We had 3 oversold confirmations supporting this from a technical standpoint. We also had the cumulative tick give us 3 signals, along with each time the cumulative tick starting to trend a little bit more to the bullish side with a positive rate of change. And if we take a look at the advanced decline spread, here the advanced decline spread was, I think, a little bit noisier compared to the other 2 internals, but in the end, you still had a similar setup just a little bit later towards that noon mark. I'll make a future video in which we'll talk about how to use this VVIX signal to actually trade the S&P ETF. I thought today's video was useful just to call out one particular example of a setup that we could codify and turn into something that is automatable and something that we can connect to an automated trading script. Take care, everyone. Good luck trading, and I'll see you in our next update.